I'm now joined by two of my favorite columnists, our Reuters Breakingviews writers, Rob Cox, who's with me in New York, and Peter Tall-Larsen, who I've worked with for a long time in London. Thanks for coming.
Pleasure.
So I thought we could start by talking a little bit about the State of the Union address and, you know, what this means for Davos man. You've been writing about this, Rob. What do you think?
Well, they have found, all politicians in the United States have found that vilifying the 1% is a very, very effective campaign strategy.
Is it vilifying or just telling the truth about them?
Or distinguishing between the 1 and the 99. The 99 will vote, and that's a lot of votes. The 1% may be influential, but it's only 1% of the vote. So, I mean, what you saw were lots of shades of the Occupy Wall Street movement last night in the president's speech, and actually you saw a lot of this in the South Carolina primary over the weekend, where
the Republican primary, which is kind of amazing, right?
It's amazing to see Republicans arguing about, you know, someone else's riches. But what you have is, there is definitely a sense in the states that people don't feel that really, I would say, the opportunities to become rich, not becoming rich, but the opportunities to become rich are equally distributed in the way that they should be.
Crony capitalism.
And so when you see a guy like Mitt Romney, who we find out got IPO shares from Goldman Sachs, who gets all those kinds of things, it's a real problem, I think, for the Republicans.
So how about Britain, Peter? I was very struck by the comments that Vince Cable made at the beginning of this week. And after all, he's part of a coalition government led by the Conservatives. This is a right-wing government talking about limiting executive pay and the government's role in that. What's going on?
Well, I think it's similar to the things that Rob's talking about. We've seen in the UK, you have a specific situation that the pay of FTSE 100 chief executives went up 40% last year, in a year when most of the people had flat salaries, and obviously there's lots
overall economy was not doing that great either, was it?
Wasn't doing that great, and there's obviously massive austerity in the public sector, and so. It's that sense of unfairness that really comes down to it. The question really is whether they can do anything about it, but what's very clear is that they want to make a big push on it, make it into a big political statement. And once again, as Rob was saying earlier with Republicans, here you have basically the right wing and the sort of the centre party who are leading on this, which leaves very little room really for the traditional kind of left-wing Labour Party to make a stand on this front.
Okay, well, we are now going to move to talking about actually business, and we are joined by your guest, Mark Cutifani of Anglo Gold Ashanti. Thanks for joining us. And Rob and Peter have been prepping on the gold market. They're going to ask you some questions.
Well, I mean, everybody here is focused on solving the European debt crisis. Everyone is trying to basically solve the world's problems. But those problems are really good for gold, aren't they? I mean, you know, if you've seen this crisis around the world in currencies has really helped gold prices and, of course, your business. So you're the one guy out here who should basically not want any solution to the crisis. I mean, just throwing you that idea, but I mean, talk about, you've got thoughts on why gold is the other, I don't want to say the other white meat, that's a sort of, but it is like the other, you know.
Look, I think to put gold into context, a very simple point. Gold has been hard currency for 5,000 years, and all we're seeing today is what those in the gold industry have probably known for the time they've been in the industry, that gold is real currency, and I think we're seeing a change in perception again in the market and a realisation of what gold has been for so many thousands of years to the human race. Right.
Well, I mean, you also, in the last couple of years, you took out all the hedges that you had on gold prices. How's that worked out? Because I mean, it doesn't look like the stock market has given you full appreciation for that since you did that.
Well, I think the equities in all have been pretty well hit hard, and certainly we're not seeing the multiples we'd normally expect. But if I just use a couple of basic statistics, if we still had the gold hedges that we had in place 3 years ago, the negative value against the market price of gold today would be $16 billion. It cost us $6 billion to take them out, and it took us $6 billion to take it out. So we're $10 billion in the black. So it looks like a good transaction from where we sit.
Right.
And we've seen a lot of volatility even in the past sort of few months on gold. Almost as things, you know, kind of there was that sense of that it was a sort of a hedge against bad news, a hedge against potential inflation. But then, really, as things got very bad at the end of last year, gold came down. I mean, there's been a lot of suggestion that it's basically been driven by speculative money that's flowing in and out. What's your sense of kind of what's driving that price?
Well, I think firstly the volatility is relatively muted compared to where we've come from. If you look at $300 to $400 an ounce, we're now at about $16.50. So the relative or the intraday trading volatility we think is still relatively low. If you look at the price of producing an ounce of gold today, it's about $1,200 an ounce. At $16.50, the industry is still struggling to cover its weighted average cost of capital. So we don't see a bubble, but we do still expect to see some volatility. And our guess is that hedge players and the short-term players make up about 20% of the daily volume in gold. So yes, there's noise, but the long-term trend over the last 8 years, 15% a year, pretty consistent. So we'd expect to see some volatility, and that doesn't concern us.
Now, Mark, one of your since you took over as CEO, I know you've made safety a big issue. I mean, and clearly, you know, digging precious metals out of the ground in all sorts of funky places in the world is a very difficult and dirty business at times. I mean, where have you gotten to? Are you satisfied with where the company's moved in terms of reducing fatalities, injuries, and that kind of thing?
Look, we've come a long way. We've improved our performance by 70%. But we still have a long way to go. One accident is one too many, and for our industry, where we're digging the deepest mines in the world, it is always going to be a challenge. But we've made good progress, we'll continue to make good progress, and we won't rest until we've eliminated all accidents from the workplace.
And one last question before we go. You know, you operate in Africa, and in all sorts of parts of Africa. I mean, what are we seeing there? Are we going to see the continent kind of emerge as a powerhouse for the economy and to see people risen out of poverty there in the next 10 years? And what are you doing to help that?
40% of the world's natural resources are based in Africa. If we're going to see a rise in Asia, if we're going to see a rise in China and India, we need Africa to be successful in providing the raw materials to support development. So it's an absolute must. The world needs Africa. Africa needs the world. We'll work out a way. I'm here to talk about corruption and anti-corruption activities, and hopefully we can all make a contribution and make a real difference for Africa.
Well, thank you very much, Mark Cutifani from AngloGold Ashanti.